Okay, folks, welcome to Sunday Night Stock Charts Live. This is where we review the beginning of the week. Happy new trading week. I hope everybody had an awesome weekend. It is a very, very rainy. If you hear a pounding in the background here, some ambient noise, that is the rain. We are getting hit with a massive storm right now. And I actually jumped into the pool. It was freezing cold, but it sent the endorphins running. The dog came in with me. We had a great time and showered up, feeling good. Let's get ready for the new trading week. Okay, so the futures are open. We are spiking up. Let's let things settle down and let's say hello to people. Seymour Rivers, thank you, sir. Appreciate that. Pete, Mr. Pete, welcome. Franklin, the gentleman. Bob and crew, good evening, and I hope everyone enjoyed a great weekend. I did. It was very, very nice, and I hope you had a great one as well. Sean, welcome. All right, the gang is slowly filtering in. Looks like a light audience so far, but I'm sure people are just relaxing, having a good time, and thinking, oh boy, my alert just fired off because I subscribed to the notification bell, and you should too. Segue into like, subscribe, hit that notification bell. Jeffrey, welcome. I got your note. Thank you. I put together, I'll go through it in a minute. I don't want to jump ahead. I put together a infographic. My first one, I just did it on the cuff, and I have to redo it a bit, but by and large, it's done. TF Hatter, welcome. All right, all. All right, now everything's starting to spike up here. Let's get to it. Let's talk about the futures action. And we have the E-minis, which are up. What are they up by? Spot 1.3%. We're testing the declining 20-period moving average on a 5-minute time frame. My guess is that we're going to pull back here, fill this gap, do a retest, and we'll see whether or not they could rally this sucker to a new higher high. I'm kind of glad to see that they're spiking this up higher. And I want to pause here for a moment, because if you're only checking in for the first minute or so of this live stream, please, I beg of you, as I said on Thursday, night, they are going to paint the tape on Friday. They're going to open this market up higher. Do not go chasing the bright green futures. They're going to have slick back salesmen on CNBC and Bloomberg saying earnings forecasts are looking up. Federal Reserve's paused. You got to start buying stocks now. No. That's what they want you to do. They want a pool of liquidity so they could sell into you. Understand the grift that is this market. And what did they do on Friday? They sold the market off. So mini's looking good here. Let's go to the NASDAQ. That's natural gas. Duh. How can I forget the symbol for NASDAQ 100? Is that? I had this up here before. Here we go. No, that's not it. Here we go. NQ, Bob. What's wrong with you? Okay. NASDAQs are up on par with the S&P 500. There's second five. Oh, we've been live for 5 minutes already. Yeah. Second 5-minute candlestick, a little bit of resistance to that 20-period moving average. No shock there. You know, this is only a 5-minute chart, so a very, very short time frame. Let's take a pause. Let's go to a 15-minute, see how that's setting up. We left the day pretty oversold on Friday. It was not a good close. You need to expect that you're going to get a bounce going into the next trading day. All right. It's a sleepy open. Bias to the upside. No great shock. Let's check in with the Russell 2000, which they seem to be in a bear market now. They're up a quarter percentage point. Let's take a look at the US dollar. Now, the dollar did not have a good close on Friday. It closed up on the week, but it did not have a good close on Friday. As a matter of fact, here's the sell-off into the close. They did manage to move it back in the after-hours session, but now we have broken support yet again. So I want to know if we break to new lower lows on the dollar. Now, this is only a 5-minute chart. In reality, it means nothing unless you're a day trader. You know, if you start doing this on a 30-minute chart, an hourly chart, then you got to start saying, okay, perhaps we have a daily setup that's under pressure. If the daily goes, and obviously the weekly's in question as well. So there's a ripple effect here. So we start watching it early on. We get a feel for the pulse of the dollar early on in the week. This is why on a lot of the charts, we set our alerts up and we get a feel. Okay, either we're breaking out, we're breaking down higher highs, lower lows, and we take our marks from those alerts. All right, so we know the dollar is looking weak at the open, so you would expect to see gold. As a matter of fact, let's not go to gold yet. Let's check in with the euro yen. The yen attempted a breakout last week. It was resoundingly rejected. The yen is down fractionally. That tells me that the yen is up. The euro is up. Yeah, the euro's up fractionally. All right, so this is a little bit more of a constructive chart here than the yen. Let's go to a 15-minute time frame. Yeah, we have a breakout on the 15-minute chart. No TTM squeeze firing off. 30-minute breakout as well. So it looks like the euro is starting off the week strong. That's dollar bearish. So now what we want to do, my buddy just entered the room. What's the matter, buddy? My Great Pyrenees Labrador Retriever mix. He's a really good-looking dog. All right, you see doors closed. Doesn't want to come in. What else do we have here? Let's stick with the commodity trade for the moment. Let's go to gold. That should be up. If it's not, I'm sure it's only down fractionally. Yeah, it's up. Now, the price of gold did not have a good close on the week. They tried to break it out. We have the beginning of a TTM squeeze firing off here. Yeah. Now, so the question is, with these TTM squeezes, there's always not a guarantee they're going to go in the direction that you want. And for those not familiar with what a TTM squeeze is, I got to come up with a different name. Basically, what it is this signal of red dots just simply tells you that the Bollinger Bands in white are trading with inside the Keltner channels. What that implies is that there's a lot of consolidation going on, a lot of tug of war between bulls and bears, and it's going to break one way or the other, and it's going to break decisively and aggressively. So right now, we don't know which way it's going to break. We really don't. It's trying to break out, but sometimes you get head fakes. They break out, and all of a sudden, you get a reversal. That's what happened to me last week on Nat Gas. Speaking of nat gas, we'll go to that in a moment. Let's go to silver. Let's stick with the precious metal trades. Let's just skip to it. Silver flat on the session. It's a 30-minute chart. Let's pull back to a 5-minute chart. I'll get it right eventually. Yeah, another TTM squeeze firing off here. This is going to be a very short-lived squeeze. It's only a 5-minute time frame, but looking good going into the new trading week. Now, the reason why I'm spending a couple more minutes more on silver is that it showed a lot of relative outperformance, even versus gold last week. And you could see that there's a lot of strength here on a 4-hour time frame. It did succumb to some selling later in the week, but this is not a bad-looking chart. And I wouldn't be the least bit surprised to see a breakout here on silver. Back to the 5-minute. Let's take a look at oil. Oil had not a very strong week, but it had an up week last week. The energy stocks began to pull back. Let's go with light sweet as we always do. Light sweet crude already up spot 4%. Let's take a look at a longer time frame here. It came under pressure on Friday. So oil consolidating. It did take out a prior low. Let's set the alert up here. Okay. As a matter of fact, let's set an alert if we get a lower low. Okay. Let's check in with nat gas. I have a position in nat gas. It's a long position, but I did re-hedge that position on Friday afternoon. And we're firming up here. We have a TTM squeeze that's beginning to fire off. It's on a 30-minute time frame, so that could carry through to tomorrow morning. And it was trading with equities early on in the week, but then on Friday began to show a little bit of relative strength versus equities, which is a good thing. Now, we are long call options here. Initially, I opened it up as a debit spread, a call debit spread. That's when you buy a deep in the money call option. You simultaneously sell a deep out of the money option, but it is a calendar debit spread, meaning I sold a shorter duration call and I went way out in time into January on the long call. That way, that basically a covered call on the trade, the time decay is literally more than the long-term time decay on the option that I own. So that way the time decay pays for itself. So if the shares really begin to move up higher, that calendar spread is only on for, I think, until mid-November. So that'll see a lot of time decay between now and mid-November. But we'll have another couple of months on the long call. So if we don't hit that strike price on the short call, well, we have more upside to go if that option expires, unless I roll it. So nat gas looking okay here into the new trading week. Let's go to a 4-hour view. Here's the downtrend channel. And I want to do one more here. And this is the November contract. Okay. And and if this goes against us, this should pop up higher. But when I always do that, when you are long of calls, even though you're hedged, you don't want to fall in love with a trade. You want to exit that trade if it's not working. You want to do it very quickly. So we are hedged. We're okay here. But if our capital is not making money for us, we want to take it out of that and put it into a productive asset. So we have our alerts set here. We're good to go. If we get bad news, we're notified. If we get good news, we're notified. We don't have to stare at this all day long. One thing I noticed over the weekend when I did the weekend commentary with members, I was talking about RBOB gasoline futures, and they really had a rough week last week. They had a breakdown, in fact. I think there's a good chance that gasoline, which threatened to break out this week, the week of 9/11, we broke down last week. Here we are this week. It's threatening to break down even further, which is a good thing, right? It's a good thing. In our world where we're the consumer, we're the little guy, good news is good news, right? The markets may not like it, but good news is good news. Good news is not bad news, right? That's the world of Wall Street. So RBOB looks like it may press lower. A little bit of good news here. We don't always want to focus on the bad. The question is that when you see something like this, when you see a pullback in yields, which we don't have yet, if you see a pullback in oil prices, if you see a pullback in nat gas prices and gasoline prices, in particular diesel prices, the question is, what is wrong? Why are we slowing down? And then the markets gets concerned. Are we looking at inflation? Recession. What didn't we talk about? We did not talk about, I know we didn't do ag yet. We didn't do my New York strip. We didn't go over live cattle prices. We will be going over that. Let's head on over to check out ag. Actually, you know what? I have live cattle. Let's go to that. I'm more curious about live cattle. For this, we'll use a weekly chart. It's going up. Pardon the pun, but the bull run continues in cattle. Very strong chart. You could thank the leftists for this. Yeah, this is a breakout on a daily time frame. Beautiful consolidation. This wants to go up. If we don't get follow through here and we break down below this support level, that would be a very negative event for live cattle, which I would love to see. Okay, let's go to ag. For that, we'll go to a weekly chart and just get a pulse check for where food prices are heading. We know that protein's moving up higher. Let's take a look at corn. Consolidating nicely, attempting to break out here. Jury's out on whether or not they win. Looks like odds may favor bulls here on corn prices. Volume last week, very light. Soybeans, a train wreck. This is going lower. Soybeans in trouble. You have a TTM squeeze firing off into the downside. No bueno. Wheat prices. Wheat prices breaking down. Another TTM squeeze breaking to the downside. So it looks like in terms of gasoline prices, in terms of ag prices, it looks like we're seeing somewhat of a deflation. You wouldn't know it by taking a look at the DBA. I didn't look at the end of the week. Oh, so it did sell off. Okay, so that makes sense now. Early on in the week, the DBA, which is an agriculture ETF, was acting fairly strong, but by week's end, it had failed along with the other ag names. So that makes sense. Okay, good. All right, let's go to comments. Insiders are still selling. You bet. Falgan, long time. How you doing, Ben, pal? How about I'm looking at a reversal play on Chewy. A few others oversold in the daily chart. You didn't watch my my video today, did you? I went over Chewy. I'll show it to you later on. Jeff, welcome. TZ Burden, hi Bob. Chat. Hope everyone is well. Same to you, pal. We just started rainy season in Seattle. No sun until next May. That's rough. Larry, junk bonds are set to move lower, Bob. Let's go with SJB, ProShares High Yield Short ETF. Eventually, junk bonds will follow the TLT down. Yeah. You know what? Let's talk about that tonight. I want to I was laying in bed the other night and I was thinking about bonds because last week the TLT had a very rough week. Now, it did have a reversal bar at the end of the week, but I was thinking about the yield curve. It was Thursday night, in fact. The yield curve on Thursday night had popped above a weekly breakout. By the end of the week, it had pulled back, but still up on the week. And so I was thinking, what correlates with the market sell-off if we get a steepening yield curve and equities begin to drop? Where's that money going to go? It could go to the dollar. Sometimes it does. Sometimes it doesn't. Usually does, but it always goes to bonds. So while I think that yields are going to move up higher, there's going to come a time where the market says, no mas, no more. And equities are going to sell off. And money will find its way into bonds, and it'll be the consumer and the institutions that begin to buy all the new paper that the government is dumping onto the bond market. Remember, the Federal Reserve is not a net buyer of treasuries. They're selling them. The Japanese are selling them. The Chinese are selling them. Anybody with half a mind would be selling bonds and not buying them. But if we get a steepening yield curve, that money is going to find a home in those bonds out of fear. Gold, silver, eventually the miners, not right away with the miners. So we'll talk about that later on, Larry. We'll look at the charts. So Chewy, we went over. We're going to go over it again tonight for monthly time frames. I have a few time frames we want to talk about. Usually I just talk about that with members. But tonight I'm feeling extra energy. So let's get to it. Let's talk about the week that is in front of us. We have, this is the video. So this is posted on YouTube. This is Unlock the Secrets. This is from, I get these titles from ChatGPT, to be honest with you. I'm embarrassed to type out these titles. It is not my style. But I put it into ChatGPT, and they have a YouTube thing there, and I use that for the description and whatnot. It works all right, but I really haven't seen much of a change, to be honest with you. That's why I'm not all that enthralled with AI so far. But this is it. Unlock the secrets. Get excited. Unlock the secrets of how to buy oversold stocks. And I put out a listogram or listicle about what I look for. I need to amend this. I need to add an 8th bullet point, and I need to correct a typo here. This is supposed to be BY, not BUY. So typo, I'm aware of it. I'm self-aware. I'm confessing to the public, and we will get it fixed. We acknowledge our failures here, and we correct them, and we move on. We do not repeat them. Let's get to the economic data that is coming out this coming week. Front end of the week this is going to be a busy week. Monday, nothing happening. But on Tuesday, things get real fast. It's going to be interesting. The Case-Shiller Home Price Index. I have not been, like a lot of commentators have been, bearish on U.S. housing. I have not, for particular reasons. I've already repeated them a bunch of times before. If you want me to, I'll repeat them again. But I am not bearish on U.S. housing. I'm bearish on commercial. Different story, different game. Consumer confidence comes out. Huge number. Wednesday, also huge. Durable goods. They were negative. They've been negative. Durable goods. Those are your washing machines, your dryers, any large ticket item that lasts a number of years. Those are your durable goods. Thursday, initial jobs claims. That's every week. GDP. This is not a first read. This is a revision for Q2. Not a big market mover, unless, of course, there's a big change. We get Powell coming out again this week. That's going to be after hours. Oh, that's going to be fun. Friday. On Friday, we get personal spending, big. PCE index, pretty big. Core, not pretty big, very big. The PCE is the Federal Reserve's favorite inflation indicator. Core PCE, very important. The year-over-year, very important. Advanced U.S. trade balance, not much of a market mover. Used to be, not much anymore. Retail inventories, important, especially for those deep discounters that are getting walloped right now, like Dollar Tree, Dollar General. Consumer sentiment final for what? For September? I guess so. I'm surprised I had that data ready already. Okay, so talking about the valuations of the market, we're going into the new trading week at 29.0 on the S&P, 29.70 on the Shiller PE ratio for the S&P 500. That's relative to the historic mean of 17.05. So we saw selling last week. You're going to get your talking heads on CNBC saying this is a buying opportunity ahead of the Santa Claus rally. No, it's not. It's expensive. And the wheels are coming off this monster economy that we have. The Buffett indicator, still overvalued. How overvalued? We are still at 177% of market value relative to GDP. That is 1.5 standard deviations beyond historical trend. That's down here. We are up here at nosebleed levels, and we are trending down. So I put in the title of this comment. It'll probably get me demonetized, but I don't make much off these videos anyway. The elites are getting worried. I find it fascinating to watch because you're seeing cracks. Remember, guys like Bill Gates, these guys, they're so full of self-interest that they're going to spin on a dime their attitudes. Case in point, he was so pro-vax during the COVID shutdown. And then after the news started coming out that the vaccines weren't so effective and the fact that he had sold out of his Moderna position, all of a sudden he was like, you know what? Maybe they weren't as effective as they thought. He spun on a dime, but he was out of his position. Fast forward to this, not fast forward, this goes back to 2021. And this is out of his book. And because a blurb came out the other day, and I'm going to get to it in a moment. There's a reason for me taking this route. And I wanted to highlight this blurb out of his book, The Maniacal Ravings of a Lunatic Mind. We need to get comfortable with change. One of the biggest points made in how to avoid climate disaster, oh no, that's not hyperbolic, is that fossil fuels are everywhere, as are processes that result in copious amounts of greenhouse gas emissions To truly combat climate change, everyone in the world will need to change their mindsets and behaviors. In the EU, animal farming accounts for 502 million tons of carbon dioxide released every year. Food systems in general are responsible for more than a third of greenhouse gas emissions. His numbers are completely wrong. He has got no basis in fact on these numbers. You have guys that are in charge of the energy department and all these other environmental groups going in front of Congress, making claims that we got to spend trillions upon trillions of dollars on climate change, yet they have no statistics to back up their theory. But what is he invested in? He's invested in plant-based meats. He is so heavily invested in it. He's also heavily invested in farmland. I doubt it's to have it grazed. It's probably just to take it off the market to drive up food prices. So his plant-based products, and I don't know if you've ever seen what's in these plant-based products. Go to Whole Foods, check out what's in them. They are garbage. They are poison. Take a look at what's in them. The sodium count alone will kill a bull. So be careful of what the so-called health foods are that they're promoting nowadays, because they will kill you. So right now, I digress. So this is in 2021. You got to get comfortable with change because of the climate disaster, hyperbolic. Get scared, get scared, get scared. Okay. This comes out the other day. This comes out the 22nd of September. All of a sudden, no temperate country is going to become uninhabitable. Say what? Wait a minute. I'm sorry. Didn't you say the climate disasters? Wasn't that your statement only less than a year and a half ago? We go on. If you try to do climate brute force, you will get people who say, I like climate, but I don't want to bear the cost and reduce my standard of living. Look what they did to the farmers over in the Netherlands. They stole their farms. They stole them. Dismisses planting trees. Are we science people or are we idiots? I believe you to be a maniacal demigod, although I do respect your capitalistic approach, but you use socialism to try to make a buck, and that I do not respect. This guy is a demon, an absolute demon. Then you fast forward. I always get a kick out of this. No, there is never a week that I don't go into the new trading week and I have another corruption out of Washington, D.C. So Senator Bob Menendez, this guy I have followed for years. He's out of New Jersey, right next door. U.S. Senator Bob Menendez. Senator Bob Menendez indicted again for corruption. This guy sits on the he's not even he's the chairman of the Foreign Relations Committee. Here he is. This is what he had sewn into his jacket. A photo of a jacket and cash from the indictment of Senator Bob Menendez found during a 2022 search by federal agents. Investigators found over $480,000 in cash in his New Jersey home. I got to be honest with you. I haven't heard about this. Am I shocked? No, I'm not. The news doesn't report it. In June 2022, federal agents searched Menendez's home and found fruits of the pair's corrupt bribery agreement with 3 businessmen, according to the indictment. I don't want to read all this. I just don't have time. Also found in the home were over $100,000 worth in gold bars. Menendez allegedly gave sensitive U.S. government information that secretly aided the government of Egypt. Every single week. It goes without fail. This guy was indicted back in, I want to say 2014, 2015, around there. It resulted in a hung jury, but they gave this guy a chairman's seat on the House, the Senate Foreign Relations Committee. Anyway, they knew he was guilty, yet they gave him that position. This is how broken this system is. Now, to be fair, he must have ticked somebody off because the FBI did not protect him. He did something wrong. going into the new trading week. McCarthy throws fit, accuses GOP hardliners of wanting to burn the whole place down as shutdown looms. This guy here, a so-called Republican, is a lizard person. He is a lizard person's lizard person. He is not a Republican. He is a rhino. He is the worst kind of rhino, probably on par with Mitch McConnell, which is saying a lot. Now, Matt Gaetz is doing his job. He's being an absolute and utter prick. Bravo, Matt Gaetz. So he's holding up the...
Frustrating in the sense that I don't understand why anybody votes against bringing the idea debate. And then you got all the amendments that you don't like the bill. This is a whole new concept of individuals that just want to burn the whole place down. It doesn't work. Frustrating in the sense that
there's not much to say here. The reason why he's got to kowtow to Matt Gaetz is because Matt held up his chairmanship. And the deal was, if that one member of the House votes to, I forget what they could do, is not put him on trial, challenge his chairmanship. It only takes one member. And Matt Gaetz could be that member. So he's threatening him. And that's why you're hearing him talk now about impeachment proceedings. He was supposed to release the J6 tapes, which he never did. That was part of the deal. So he's a snake. So we'll see how he'll get his way out of this one. And they want to send another $24 billion over to Ukraine, not one penny for the citizens of Maui. And I keep forgetting the town over in Pennsylvania that got destroyed. I gotta remember that town. It's very disrespectful. I don't know that. So my apologies for not knowing that. All right, as we go into the new trading week, more projections. CBOE projections show U.S. federal debt rising by $5.2 billion per day for the next 10 years. If you want to know why this chart here, the 10-year yield on a yearly chart, is breaking out to, I don't know, highs not seen since when? Around 2007, right around the last financial crisis. So the reason being is because nobody wants our debt. Nobody wants our paper. So we have to pay a higher yield. It's called normalization. And historically, this is not what you consider a high yield. It's a normal yield, maybe even a little bit low, but we're so in debt, we simply can't afford it. So when you take a look at last week's price action, we broke out yet again new multi-year highs on the 10-year yield. It all has to do with the fact that these guys just want to spend money that's got to be borrowed. There's not a pile of cash at the Treasury. There's IOUs there, but there are no cash. There's no cash to be had. They got to go to the bond market, say, give me $24 billion, and then they send it over to the Ukraine. That's the way it works. It's that sick. So this is what you call a parabolic blow-off top. This is classic parabolic blow-off top. You could argue we're already in that parabolic blow-off top, but there's going to be a crisis that comes soon because the yield curve is telling us that. We're going to get a steepening of that yield curve, and when it comes, they are going to need to print money like there's no tomorrow. Probably this is an understatement of where our debt is going to be by 2033. This probably does not assume that there's going to be a looming another financial crisis yet again, because they never learn from past mistakes. All they know how to do is double down. Mega Mall. This is an analogy, a metaphor for the United States. American Dream Mega Mall sees losses quadruple to $245 million. Now, this is a mall over by the Meadowlands in New Jersey, just outside of New York City. And it's a mall that reinvented itself. It's not just a standard mall. It's a mall that caters to, rides, etc., like indoor snowboarding and stuff like that. So it's family centric. So they try to draw the consumer back in. However, it doesn't appear to be working that well. A preliminary financial report indicates the mall's operating expenses soared to a staggering $428 million. Those are operating expenses in 2022, nearly double the previous years. Separate from operating costs, the mall also incurred 350.3 million in non-operational expenditures, such as debt interest and restructuring fees. So it's inflation driving up their cost. It is also debt, which they took out in financing before COVID to help build the place on cheap money. Here's the breakdown of the debt here. And now they need to roll that debt over at measurably higher yields. This is what I always talk about. The problem is they can't raise rents because the value of the property is also declining in value. That's the problem. This is this is a microcosm for everything that is commercial real estate in the United States. It's also a microcosm for at least the top two tiers here, inflation and the rise in operating costs. It's a reflection of the failure of government and the damage that it's going to do and is doing to the American consumer. Lenders, and it's not just the regional banks here that are going to take a hit. Lenders for this project include J.P. Morgan, Goldman Sachs, and this gives me a warm and fuzzy feeling inside. Soros Fund Management, bravo. Boom. Neil Shapiro, a New York State attorney, said the project last year, it's been like watching a train wreck that goes on forever. There aren't a lot of projects that lose at least $3 billion that we're still talking about as being projects. The final difficulties plaguing the market serve as a cautionary tale about the dangers of over-leveraging. Hello, Federal Reserve. Hello, Treasury. Hello, Congress. That we believe we are going to see over and over again as the Fed maintains its tight grip on the gears of the economy via its higher for longer stance. Even though it's the right thing to do. It's the right thing to do. How much time do we have here? We're on low on time. The great debt fiasco, how Washington's reckless and opportunistic, I'm not going to read this whole thing, opportunist pandemic splurge jeopardize America's future. As the U.S. blows past 33 trillion, think about that number, 33 trillion in national debt. It was 20 trillion when Trump took office. The first time, and adds roughly 1 billion to new debt every hour. A comprehensive new report at the Heritage Foundation reveals U.S. government has tacked on 7.5 trillion in new debt over the past 2 years alone, drawing a stark image of America's economic prospects. The report sheds light on the colossal spending packages rolled out between 2020 and 2022, amounting to 7.4. We kind of read that already. What I wanted to point out here is that it's a staggering $57,400 per household, folks. That's how much we owe, and we got nothing. This is about stagflation. I'm going to skip over this, running tight on time. I think I went over this last week, but it's worth noting yet again. Bankruptcy filings have reached levels on par with the 2008 Great Recession and the 2020 COVID pandemic. Now, here's where insanity reigns. Let's read the blurb. Analysts are repeating their 2008 financial crisis mistake. Despite drawing a sharp contraction in leading economic indicators, earnings are being revised upward. And I validated this. This is a major warning signal. Here's a chart. In blue, net earnings revisions, they're going up, but 6-month leading economic indicators are going down. And when you take a look at Morgan Stanley, you could see that they are raising consensus expectations through 2025. They don't see any problem whatsoever on the horizon. The yield curve, be damned. Be damned. Here's the yield curve Weekly view, no breakout. You could argue there was one. We want to be conservative. We're going to say we close at resistance, probably breaking out this week. But what is not disputable is that on a monthly time frame, the yield curve is breaking out. On a quarterly time frame, we only have a couple of trading days left here to go, folks, in the month and the quarter. Wrong chart. Quarterly chart. A clean and decisive breakout and a steepening on the yield curve. From Liz Young, VIX seasonality. VIX seasonality, and I found this very, very interesting. And I even went back and I did some private validation of this as well. And this is an accurate chart because usually when you go into November, you get seasonally strong stocks. A rally in November, lesser so in December. But you could, this is accurate. So here is current state. The blue line in purple line is historical 1990 going to 2022. And you can see that we go higher on VIX, lower on equities this time of year. Then you get the pullback on VIX into November. Then in December, it really begins to drop off. You get your Santa Claus rally. Everybody goes away for Christmas and all is right with the world. And I validated this here, 34 years worth of VIX. And you can see September up. In October, we're up. We pull back as it shows in that chart in November a little bit. Then we spike back up in December. So expect volatility on a seasonal basis here on the VIX. That means pressure on equities, November being the exception. Now, here's a chart that got my attention. This is an algorithmic chart of the stock market crash of 1987. Here's a double top. We pulled back. We did a double bottom setup. We rallied in October and then crashed. This is us now. I'm hard pressed to poke holes in the accuracy of an eerily accurate chart here of the, I believe this is the S&P 500. Let me validate that. Yeah, SPX. SPX 1987 to now. I'll share this out because I got the willies when I took a look at it. Let's go to comments. Thank you, Franklin. Appreciate that. Yes, please smash the like button. Should be called Jimmy Hoffa Mall. Seymour Rivers, haven't been to a mall in 7 years. I liked going to malls. It's so sad. I used to love malls. I still do like malls, except they're empty. It's depressing going to a mall. Yeah, it's scary, right? All right, let's do some chart requests. I need to go over a couple of charts here that I promised I would go over for historical perspective that are on the week ahead commentary, how to trade extreme oversold stocks, posted on YouTube. There's a link below to the listogram if you want to get that. It's my at current 7-part. It's going to be updated to 8-part series. I'll email out the new version once whoever's on that list, I'll email out the revised version, but get on that list, please. And you can download it now. So let's go to it. I need to go over Square. Sorry about that. That's somebody in my driveway pulling out. Okay, so we're going to go to the monthly chart here. I don't have a lot of historical data here on Square. Wow, look at this head and shoulders setup on a monthly chart. Now, folks, the reason why we're going over Square, Dollar Tree, Illumina, Chewy, and I forgot to go over Jets earlier. That's a airline ETF, Jets. We're going to go over that one as well. These are all extreme oversold stocks. I don't have time to go over the daily charts right now. Go to my video, which I posted earlier today on YouTube. It's there. I even emailed it out. So if you're on our email list, it should be in your inbox. And I went over the daily charts of the whys of as to why I like these stocks. Now the question is where is historical support? That's primary question number one. Where are buyers of like mind? If we don't know that, we don't trade it. So you can see here that we have broken through one major supply zone right at around $52.31. We have a supply zone. I got to update the members area. Members, this is going to be updated tonight. I'm going to be entering in entry points, exit points, stop loss points, and these numbers here. Now, these numbers are just numbers where you want to begin averaging in. You never go buying all of your position all at one shot on extreme oversold stocks. You average down. I know it's against the Bible. That is the stock market trader almanac. No, when you're trading extreme oversold stocks, you average down your price. That's what you do. Because your bet here is that the rally is unsustainable. You're not going to begin buying until you hit historic support in and around that support level. So SQ, we're liking 42.88 as support level number one. If that fails, we're coming down here I think we'll come down here. My mouse is giving me troubles tonight. We're coming down to around $35 a share. S2. 42.88. That's square. Support level number one, 42.88. Support level number two, $35 per share. We saw a closing price on Friday of $44.71. This stock, even though it's very, very oversold on a daily time frame, it is not ready to be bought yet. If it rallies tomorrow, okay, let it rally. It's not going to have my money with it. We need to wait for historical support. If we break that rule, then we have no business doing these trades. Next chart up. DLTR. Heavily indebted. Less than $1 billion, less than $600 million in cash, over $10 billion in debt. I shop there all the time. I love it. We're closing in on support at 102.76. I don't think it holds. I think we need an overshoot to the downside. I'm liking $97.40. That doesn't mean if we get a rough sell-off below 102.76, it doesn't mean that I won't nibble. But ideally, I'm getting heavy around that $97 per share mark, and that way I'm buying where I have buyers of like mind. And that's the operative term there. Remember, you go to the daily chart. Volume as of Thursday was still very heavy. It dropped down on Friday, but we need to see that consistently. We need to see that volume go to sleep. It tells us that the shorts are they're not shorting as much anymore. You're seeing this in the short volume. Short volume is now declining somewhat, but you still have sellers out there that are just at max pain. They can't take it anymore. Back to the monthly chart. So ideally, support level number one, 102.76. I don't think that holds. I'm liking, let's call it 97.50. Next chart up. Chewy. Again, another extreme oversold stock on a daily time frame. You look at a daily chart, it just looks like it can't go down anymore. The problem is it can. And the problem with Chewy is this. There is no historical support below. The only support below is where we closed on Friday, and that is right at the bottom of this volume shelf. And volume last week was still very heavy excuse me, this is a monthly chart. Monthly down volume continues to rise, and the month isn't over yet. Weekly down volume continues to rise. Daily down volume is declining sequentially. So we'll see what happens here. The best bet is that this consolidates sideways and then we begin to break out. This is one of my more favorite trades in terms of the fact that they do have more cash than they do debt. That's the only reason why I like Chewy more. Otherwise, I wouldn't be trading this stock. I don't like the fact that there's no real historical support immediately below. So we may not be trading this one, to be honest with you. Last one up is Jets. We'll go to the daily chart because I didn't cover it early on in the day today. I forgot to. This is an ETF of the airlines. We are in a downtrend channel. Folks, TrendSpider Automated Technical Analysis. Go over to their website, link below, and they're giving away 2 months free. When you go to checkout, click on the coupon code down below, enter CON35. That'll get you an additional 35% off. So please check it out. And I give it away free to our silver and gold level members. Trend lines. Here, take them off, put them back on. So Jets on a daily time frame, we have RSI at what? 18.5, barely makes it onto our screener. Volume is still very heavy. Now we go to the monthly chart to identify where we might have buyers of like mind. And I think it's quite obvious. That's right in here. We're going lower. We closed on Friday at $17.17. We don't have that much further to drop here to find a support cushion. Let's call it a cushion. And that goes for all of these names. So the support cushion could be between 1680 and 1611 per share. Jets. And again, members, I'll have this updated in the members area for you tonight. Okay, what else do we want to go over here? Oh, Larry, let's go over HYG for high yield debt. We can go over JNK. They're going to look the same. The junk bond market has amazingly been holding up fairly well in recent months, but it is coming under a bit of pressure. We're testing the lower band of support. Volume is light on the month. Let's go to a weekly chart. We broke support. We broke support technically back here in July, rallied back, failed recapture. Now we're breaking down yet again. So good point, Larry. High yield debt, let's go to HYG, is coming under a lot of pressure. This is a weekly chart, high yield debt, ETF HYG. We're rolling over here. Let's take a look at that short ETF you wanted me to look at. SJB. We had a breakout last week on SJB. Let's check out weekly. We have a TTM squeeze firing off here. Very tight trading range here. This is probably going to get resolved to the upside next week. So we broke out the week of 9/11, did a retest last week, still closed down, but I'd be looking at a continuation breakout here on SJB. Let's go to implied volatility. No implied volatility, very low. It's better to buy these options than to sell them right now. Clean breakout, daily view. Bullish key reversal bar on Friday after a TTM squeeze. Again, Bollinger Bands inside these Keltner channels. Very, very bullish SJB. I think this breaks to the upside. We're probably going to be getting long as soon as tomorrow. Members, I'll send out an alert. Tesla will be on a watch for me. Call options. You want to buy the calls on Tesla? Good luck with that. Tesla's, you got to remember something about Tesla. Tesla's an extremely expensive stock. It also has an extreme exposure to China. China is imploding right now. So Tesla is not going to be immune from the sell-off over in China. And last week, Tesla broke support. You're looking at a potential double top here. And if it breaks down below $211, sayonara Tesla. It's going a lot lower. So be careful of those calls. If you're going to sell the calls, different story. As a matter of fact, yeah, we had a strangle on actually a ratio strangle on Tesla, and I closed out the puts. I was worried about a move lower on Tesla. I closed out the put side, and I closed out 2/3 of the calls. We're still short of Tesla vis-a-vis naked calls. So just be careful here. Be very, very careful. When this goes, it's going to go fast. The entire market. So please be very, very careful. If you're going to buy calls, you need to say, what's my edge over other traders? If it can't be articulated in 20 seconds and in one sentence, it's not your trade. Avoid it. Please. I don't want to see anybody lose money. You're welcome, Mike. Anytime, pal. That's it, folks. Thank you for being here. Like, subscribe. Don't forget, check out the video I put out earlier today. Unlock the secrets, how to buy oversold stocks. I hate that hyperbolic unlock the secrets, but that's chat GPT. I can't say it for whatever reason. But I think I did a good job here on the video, on the daily charts of the stocks I just went over, with the exception of Jets. I didn't go over that one. So check it out. And here, I'll even copy and paste this if you'd like to make it easier. And you could go on over there, check it out. Everybody have a profitable trading week, an awesome night. I'll talk to you soon. Franklin, thanks for being here, pal. You're very welcome. Talk to you tomorrow. Be well.